For decades, the US dollar has been the world's default currency, serving as the backbone of the international financial system and a symbol of economic power. It's the standard for global trade, especially for vital commodities like oil, natural gas, and precious metals. Most international contracts and transactions are priced in dollars, making it essential for countries everywhere. This status has given the US immense power and influence, allowing it to shape global markets, set financial trends, and even influence international policies. The dollar's rise wasn't accidental. It was built on America's post-World War II economic strength, industrial capacity, and the global trust it earned as a stable democracy. After World War II, the US emerged with the world's strongest economy, while much of Europe and Asia rebuilt from ruins. American factories powered the recovery, and US loans helped reconstruct devastated nations. The dollar became a symbol of stability and reliability, trusted by governments, businesses, and individuals alike. In 1944 at Bretton Woods, 44 nations agreed to make the dollar the world's primary reserve currency, pegged to gold. This historic agreement set the stage for decades of economic growth. Other currencies were then tied to the dollar, creating a stable and predictable system for global trade and investment. This framework fueled decades of growth, with the dollar at the center of international finance, investment, and commerce. But today, the world is changing rapidly, and the dollar's dominance is being challenged in new ways. Other economies have grown stronger, and new technologies like digital currencies and blockchain are reshaping how money moves around the globe. Political tensions and shifting alliances are making some countries question their reliance on the dollar, seeking more control over their own financial futures. Many are actively seeking alternatives, a process called de-dollarization, where nations diversify their reserves and trade in other currencies. This shift is gradual but significant, with each step marking a move toward a more multipolar financial world. The question now isn't if the dollar's role will change, but how fast that change will come, and what it will mean for economies, businesses, and people everywhere. The era of unquestioned dollar dominance may be ending, as new players and new systems emerge on the world stage. The global financial landscape is on the verge of transformation, with uncertainty and opportunity ahead. As countries diversify, the dollar's influence faces new tests, and the balance of power in global finance begins to shift. The consequences of this shift will ripple across economies worldwide, affecting trade, investment, and everyday life. The world is watching closely, as every development could reshape the future of money. The next chapter in global finance is about to unfold, and its impact will be felt by nations and individuals alike. What does it mean to be a global reserve currency? Why does it matter so much in the world of finance and international trade? Think of it as the world's go-to money for trade and savings. It's the currency that countries, companies, and people trust most when doing business across borders. Central banks everywhere hold large amounts of US dollars in their reserves, often more than any other currency. These reserves act as a financial safety net and help stabilize economies. This makes international trade smoother. Most deals, like oil purchases, are done in dollars. Even countries that don't use the dollar at home often use it for global transactions. Countries also use dollars to manage their own currencies, buying or selling them to influence exchange rates and keep their economies stable. For the US, this brings huge benefits that most countries can only dream of. There's always high demand for dollars, keeping its value strong and making it less likely to suffer from wild swings. The US can borrow money cheaply since everyone wants its bonds. Investors around the world see US debt as safe and reliable. This is called America's exorbitant privilege. It means the US can spend more and borrow more with fewer immediate risks. It lets the US run bigger deficits with fewer immediate consequences, giving it more flexibility in economic policy. But this privilege depends on trust. Trust in the US economy, its institutions, and its political stability. The world must believe the US economy is strong, and its leaders are responsible stewards of the currency. If that trust fades, countries will look for safer assets and other currencies for trade, shifting the balance of global finance. The dollar's special status isn't guaranteed forever. History shows that reserve currencies can and do change. It must be earned through sound policy, responsible leadership, and a commitment to global stability. If the US falters, the world will move on, seeking alternatives that offer more security and reliability. The challenge for the dollar is to maintain that trust in a rapidly changing world. As new powers rise and other currencies gain strength, the competition grows fiercer than ever. The future of the dollar's dominance is uncertain, and the world is watching closely. The world is preparing for change, exploring new options, and diversifying reserves. The era of easy privilege may be coming to an end, and the next chapter in global finance is about to be written. The Bretton Woods Agreement in 1944 made the dollar king, setting the stage for a new era in global finance. The world, reeling from years of war and economic depression, desperately needed stability and a sense of order. The United States, with its vast gold reserves and booming post-war economy, was uniquely positioned to offer that stability to the world. Under Bretton Woods, the dollar was pegged to gold, and other major currencies were pegged to the dollar, creating a clear and reliable system. This arrangement made international trade more predictable, reducing uncertainty and encouraging investment across borders. For the next 25 years, this system fueled unprecedented global growth and prosperity, especially in the United States and Western Europe. But as the years passed, the system began to strain under the weight of America's growing financial commitments. As the U.S. spent more, particularly on the costly Vietnam War and domestic programs, it printed more dollars than it had gold to back them. Other countries grew uneasy, fearing the dollar was no longer as solid as gold, and began demanding gold in exchange for their dollars. In 1971, President Nixon shocked the world by ending the dollar's convertibility to gold, a move now known as the Nixon shock. The Bretton Woods system collapsed, sending shockwaves through the global financial community. Many experts predicted the end of the dollar's dominance, expecting a new era of uncertainty and competition. Yet despite the turmoil, the world kept using the dollar for trade, oil purchases, and as a reserve currency. The system shifted to floating exchange rates, but the dollar remained at the heart of global finance, trusted by nations and investors alike. Trust in the U.S. economy, its institutions, and its financial system kept the dollar strong, even without gold backing. The dollar became the world's anchor, a habit that proved hard to break for governments, businesses, and travelers everywhere. The more the world used dollars, the more essential it became, a cycle that reinforced itself over time. The dollar's dominance became self-reinforcing, shaping the global economy for decades. Today, however, that trust is being tested again by new economic and geopolitical challenges. The foundation remains strong, but cracks are beginning to show, raising questions about the future. The world is watching closely, waiting to see if the dollar can continue to hold its ground as the cornerstone of global finance. Lately, the dollar's dominance faces new threats. U.S. financial sanctions have shown the world how much power Washington holds. Freezing Russia's reserves after the Ukraine invasion was a wake-up call. Countries like China and India saw their own dollar assets could be at risk. This has accelerated efforts to build alternative financial systems. China, now the world's top trading nation, is pushing the yuan in global trade. It signed currency swap deals and launched its own payment system, CIPS. The BRICS nations are exploring a new reserve currency. Even U.S. allies are diversifying. Europe promotes the euro and Saudi Arabia is open to non-dollar oil trades. Each move is a small crack in the dollar's foundation. Together, they signal growing pressure on the dollar's dominance. The world is building options. The era of dollar monopoly is under real challenge. Why are countries moving away from the dollar? First, they want more control over their own economies. Relying on the dollar gives the U.S. too much leverage, especially through sanctions. Second, the world is now multipolar. China, the EU, and others want their currencies to reflect their economic power. Third, holding only dollars is risky. A U.S. crisis or inflation could hurt countries' reserves. Diversifying into euros, yuan, or gold spreads that risk. Finally, America's soaring debt worries many. If the U.S. prints more money to cover debt, the dollar's value could fall, hurting foreign holders. These factors combine to drive de-dollarization. It's about sovereignty, risk management, and adapting to a changing world. The shift is slow, but the momentum is real. The global financial order is evolving. If the dollar loses its top spot, America will feel it. Borrowing costs for the U.S. government would rise as demand for dollars drops. More tax dollars would go to interest, not public services. Imports would get pricier, fueling inflation and shrinking Americans' purchasing power. U.S. exports might become more competitive, but the transition would be tough for households. America's global influence would shrink, sanctions would lose bite, and its voice in global institutions would weaken. Financial markets could face shocks if foreign central banks sell U.S. bonds, interest rates could spike, risking recession. The U.S. would have to live within its means like any other country. The era of easy money would end. The adjustment would be painful but necessary. America's special privilege would be gone. A world with less dollar dominance would be more volatile. Multiple reserve currencies mean more exchange rate swings and trade complexity. Power would fragment into regional blocks, euro in Europe, yuan in Asia, dollar in the Americas. Geopolitical divisions could deepen, making global cooperation harder. Developing countries might gain flexibility, trading in currencies that suit their interests, but smaller economies could be caught in currency wars between giants. The transition could destabilize vulnerable nations. Predictability would give way to uncertainty. The global economy would need careful management to avoid chaos. The shift could bring both opportunity and risk. The world must tread carefully. The stakes are high for everyone. If the dollar slips, who takes over? The euro is a top contender backed by a large, wealthy bloc, but EU politics are complicated. The Chinese yuan is rising, but China's strict controls and lack of transparency hold it back. No single currency is ready to fully replace the dollar. The likely future is a mix, a basket of currencies: euro, yuan, yen, pound, and the dollar. Central banks would diversify, spreading risk. This multipolar system matches today's distributed economic power. Gold is making a comeback as a neutral store of value. Digital currencies and IMF special drawing rights are also being discussed. The next reserve currency may not be a single nation's money. The world is preparing for a new era of financial balance. The dollar will likely share the stage, not leave it. The dollar's future is uncertain, but not doomed. US debt, global tensions, and rivals' ambitions are real threats. A sudden collapse would be chaotic, but the system is slow to change. The dollar's dominance is built on deep trust and vast infrastructure. US financial markets remain the world's most trusted. No rival currency is without flaws. The euro lacks unity. The yuan lacks transparency. For now, the dollar is still the cleanest shirt in the dirty laundry. The US has time to fix its problems and rebuild trust. The most likely outcome is a gradual shift to a multipolar system. The dollar will remain important, but not alone at the top. This change brings both challenges and opportunities. The story of the dollar's crown is still being written.